I'll show you how to trade meme coins, avoid rug pulls and scams, and actually make money trading this new attention token. I've been trading meme coins since the early Doge and Shiba Inu days, but the real explosion happened with Solana meme coins in early 2024. I ran my meme coin portfolio from 7K to $120,000, catching plays like Zerebro, Troll, and most recently 67. In 2025, I founded Ape-In, the best mobile meme coin trading app that filters out scams automatically. I've personally analyzed hundreds of meme coins and regularly publish research and findings on X. Meme coin trading is very different from any other trading. It's different from stocks, it's different from even altcoins. In regular altcoins, it's a little bit related to 4-year cycles, the way Bitcoin is behaving, but meme coins are actually separate from all of those cycles and trends. Now, what are meme coins? Those are jokes. The keyword is meme. They're coming from internet memes, where some memes become very popular and there are token attached to it, so you can speculate. If one meme you think will get more popular than other, and you think more people will be sharing it soon, maybe in one day, maybe in a couple days, you can speculate and think that and invest into this meme and hopefully make some money on it. And those memes can be internet memes, some new memes. Pretty much all the old memes already been used and all the tokens were already created for the old memes. Don't think that you will find some meme from 4chan from your childhood, unravel some meme from 2017 or 2016. There is 100% chance that all of the memes were already created, all of the popular memes at least were already created, and we now have the new memes or the memes that are happening on TikTok. That is a big category now. For example, 67 was almost exclusively from TikTok, and now it's a multi-million meme coin. And also there are company memes where a project launches a meme coin and it's kind of a governance and utility token, but it's not. Again, I want to stress that there is nothing behind those coins, and they are just saying these are our tokens and these are attention tokens. Each unit represents attention. If you believe that this company will continue growing and the project continue gaining more mind share, then the coins, the meme coins that are attached to this project will be growing in price because people will be speculating more and more on those tokens. Now, every meme coin is traded on a specific chain, and if one meme coin exists on one chain, it's not guaranteed that it exists on other chains. We have Bitcoin, we have Ethereum, we have Solana, Polkadot. All those are different chains. And for example, there are some meme coins on Bitcoin and on Ethereum, but the transaction fees are just so high and the transaction takes so much longer compared to the faster chains. So those chains don't have big volume for meme coin trading. And the biggest volume right now is on Solana, and the second one would be Binance on BNB, and the third one would be on Base. Now, who creates those meme coins? Virtually anyone can create it, even you can create it, and it costs practically nothing to create ones. And there are so-called launch pads where you can upload an image and small description, as well as attach some links for your Telegram or maybe to Twitter, and that's it. You press launch and the coin is out there and it's tradable across the world and people can buy that coin. Now for Binance, there is 4.meme. That's the main launchpad for Binance coins, but for Solana, the main one is Pump Fun. The second one is Bonk.fun, and also there is Sugar and Heaven. Because we will be looking at the most popular chain and meme coin, Solana, that means you need to have some Solana in your wallet. You can either get it in your centralized exchange or in your decentralized exchange, whenever, or in one of your wallets if you have Trust Wallet. But also the terminal that we'll be looking at also allows you to buy Solana directly using your debit or credit cards. So now we've covered that there are different chains, then there are different launchpads where those meme coins are created, and now we will look at the terminals, the trading terminals, where you will be working with and looking at charts and placing your orders. So most popular one is Axiom. It's collects a lot of information because again, those are attention tokens, so it's not only the on-chain data that needs to be collected, but also social presence, and specifically what's happening on X, on Twitter, whether the account that created this coin changed already their name multiple times. That's also important. Whether the DEX was already paid for this coin. So all of those signals, they need to be gathered, and it's not necessarily on-chain data. And Axiom does the best job on presenting all that information so you can act quickly, accordingly, and place fast buys and sell orders and ultimately make money. And the other besides Axiom is Nova.trade, and also there was Padre terminal, but it got acquired by Pump Fund itself, by the launchpad. So you can also do the trading on Pump Fund directly. Check another video that I did on Memecoin trading, where you can see other tools for Memecoin trading like Telegram bots and various Chrome extensions. Now, as I mentioned, Memecoin trading is very different from other types of trading. It's not equities, it's not altcoins. And you are trading attention tokens, which are internet communities. You're betting that something will get more popular and people will be buying that something later on and you will make money. So your number one goal is capital preservation. I would recommend you to start with no more than 10 SOL, and each trade should be 2 to 3% of your entire stack. So that puts you at 0.2 SOL you should be risking on each position. And unless you double your 10 SOL into 20 SOL, don't do anything else. Don't try to venture into other trading strategies. Don't try to increase your position and trying to put 1 SOL or 2 SOL for each trade. It's just everything, you will get rug pulled, and which is what happens when someone launches a token and the price goes to almost zero after you buy. And that's how you will lose your position that you put into initially. If you're learning something new in this video, press like button so YouTube will recommend more videos like this one and you will continue learning. Now let's start trading with Axiom. Use the link in the description below, and if you sign up with that, you will get 10% off of your trading fees. Remember, each time you place buy or sell order, Axiom will be charging you 1% in fees, and those fees start to stack up quickly as you continue trading. And if you use the link in the description, you will get 10% off of those fees. You can create an account on Axiom using your Google, and that way a new wallet will be created, or you can connect your Phantom wallet or other Solana wallets. I recommend you to separate your main stack where you have most of your portfolio, Phantom, and the Axiom, so that you have a separate wallet where you can deposit a small amount, maybe 5, maybe 10 SOL, so you can start experimenting a little bit, and do not mingle it all together, because if there will be any exploits, you're also increasing your risks and chances of losing all of your money. So just create a new wallet, maybe with Google, and so that your funds on Axiom are separated from the rest of the stack. Once you have your new wallet created, you will be able to buy Solana directly using your debit or credit cards. Now, when you open Axiom, the first you will see Discover page, and this is just an overall what's happening in the Memecoins, what are launching, and we're not gonna look at it too deep. We're gonna go straight into Pulse. At the top left corner you see Pulse, and Solana is chosen. That means we will be looking at Solana tokens only. The other one is Binance BNB chain, and you can see there are 3 columns: the new pairs, final stretch, and migrated. Now these columns represent different life cycles of a meme coin. New pairs is the moment they're only created, when they deployed on the launchpad, and 99.99% of them are scams, and your goal is to remove all the scams, and all of the filters in Axiom is about how to weed out all the scams. The final stretch, the coin gets into the final stretch column when it reaches almost $52,000. Now that amount varies because it's calculated actually in Solana. So as Solana price changes, the graduation level changes, but not too much. Right now it's at $52,000. Once it's closer to 52K, it gets into the final stretch, and you will see the percentage point how close it is to graduate. And the final is migrated, that when the meme coin migrated or graduated, or the market cap went above $52,000. Now you'll probably see a lot of coins right now, everything is popping, everything is moving, and on my screen it's more stationary, and I even have fewer coins in the new pairs and final stretch. It's because of the filters that are applied. And let's jump closer and look into those filters so that you will weed out those scams. At the top right corner, that is the icon for filters. Click on it, And you see here for migrated, you can navigate between new pairs, final stretch as well here in this little window. But right now, let's look at migrated. Deselect all other launchpads and leave only Pump, Bonk, Haven, Sugar, Moonit, Launchlat. That covers pretty much 99% of the volume. All the others are almost dead at this point. And if you want to catch those big runners and most of the volume, then just target these launchpads. Now scroll a little bit lower, you have the audit. So the first filter is top 10 holders %. That means what percentage of the supply belongs to the top 10 wallets. What usually scammers do is if they create a token and they have a bunch of wallets and they will distribute to multiple wallets so that it doesn't appear that one wallet has a lot of supply, but then the bundle all of this network of those wallets, it will have big amount of the supply, 30, 40, 50%, because they want to control most of the supply and then maybe let 50 or 40% of the supply only to be tradable. And when the market cap reaches certain level, they will dump everything on chain in one big sell order, creating that big red candle. And that's when you will lose money because you will be in that other 30, 40%. So you don't want that number to be very big. And I have 30% set up. The next one is amount Dev holding. So Dev in this sense is the creator of the meme coin. So Dev holding percentage is what's the percentage of the supply belongs to the creator of the token. And again, same logic. If I want to create a token and I have 90% of the supply, I can just sell that 90% of the supply, and whoever bought the other 10% will be distributed amongst other traders. And if I decide to sell, it will create one big candle and everyone will get rug pulled. That's the definition of a rug pull. Then you can skip all the insider percentage, snipers percentage. At this point, as you learn, these are not important. And the bundle percentage, it's very close to the top 10 holders. Now, the reason why bundle is separate is because sometimes those very sophisticated scams, they have wallets that will not be even in the top 10%. And they will have just thousands of wallets with a small amount, but it's still a part of one big. Creating a wallet doesn't cost anything. So it will be part of one big web of wallets. And however, because those wallets usually have transactions coming from one wallet to another wallet, because initially they bought supply from one wallet, they all will get linked. And that's how Axiom groups them together into a bundle. So that's for audit. For metrics, we're looking at, let's talk about the market cap. So I have market cap at $70,000. So the graduation, as you remember, is $52,000. 70,000 is a little bit higher because a lot of coins, they go up maybe to 100K, but then they go down to 80 to 70. So that's why I have it to 70K, but you should be looking at ideally more than 100K. But again, I want to catch those retracing down to 70K. That's why I have it so low. But 100K or 200K, it's even better because that way you weed out most of the scams. Those are more established coins. And if the coin has market cap of 70K, we want volume to be at least double. Ideally, again, it should be triple or quadruple of the market cap. The higher the volume, the better. Global's fees paid. What are global fees? Is the total of how many fees were paid by the trader. So each time the trader places the trades buy and sell, they have to pay a small amount in fees. And when all those fees are added up together, we have the filter to be at least 10. And the reason is there are some volume bots that will be trading between each other and they're not paying any fees, or they pay very little fee. Volume bots, usually they don't prioritize their buys because one person, the scammer, the developer, he already manages this volume bot. So he already knows, he doesn't need to make sure that the trade goes through. But the real traders, if they want to get on the narrative, maybe they saw some signal that they following, they want to get into this coin, they want to have that position, so they will set higher trading fees. So we want, for the migrated coins, we want the global fees to be at least 10. And you will see, actually right now you can see that the global trading fees are right here. So 95, 31, 26. So 10 is very conservative amount. We can even raise it to 20 because you can see all the coins have global fees way higher, and the higher the global fees, the more desirable that coin is. Then the other filters are just empty. And then for socials, so when a coin is being created, when you are a developer, a coin creator, you can include any links. You can add links to Twitter, Telegram, to a website. And good projects, if again, maybe it's the company, maybe it's the small startup that they are doing token for themselves, a meme coin for their project, they will have all those links. And if it's a meme or maybe it's a trend on TikTok, those links are also will be included. However, you need to remember that people can put, the developers, they can put any links, like literally you can put google.com and it will show up as a link to a website, to a project website. So take it with a grain of salt. However, that's why I don't have any filters right now set up for it, because it's not really a signal if the coin has a link or not. But there is a quick view how to navigate if the links exist, and I'll show you later in the detailed view of the meme coin. For migrated, now let's switch. We click apply, and you can either switch into filter here for the final stretch, or you can switch between in the window itself, final stretch right here. So it's pretty much the same protocols. We keep the Bonk Haven, Sugar, Moonit, Launch Labs. These are the main launch pads, as I mentioned before. So for final stretch, it will be a little bit different. So for the age, we're gonna put the audit is the first one. For age, the maximum age, we're gonna put 60 minutes. Why? Because it's 1 hour. If the token hasn't migrated, hasn't reached $52,000 after 1 hour, after 60 minutes of being on the platform, it means that there is not much traction. Maybe later people will discover it and it will go up. But again, our goal right now is to weed out scams as much as possible. So we just want to make sure to be on the safer side. So just leave it 60 minutes, 1 hour. If the token is not migrating before that, then just don't consider it at all. No other audit filters. For metrics, market cap is much lower because again, it's not graduated yet. So it will be 20K and the volume would be 10K. That is everything. And then for social, again, there is nothing in the socials. And if you apply it and you only include these launch pads, then you will have much fewer coins and projects. So right now I have only 3. And then finally is the new pairs column. Now, new pairs, don't ever touch it. Don't try to trade it. Don't try to buy anything in the new pairs. This is just completely Wild West. And the chances of you losing money when buying in new pairs is almost 100%. However, you still want to look at what's happening in the new pairs because you want to see if there is a new narrative is popping, then you will see multiple copycats showing up in the new pairs column. So let's look at the filters that are useful to weed out most of the spam and obvious scams. Again, Launch Labs, as I said before, audit the age no more than 40 minutes because again, if the coin is gaining traction, it will quickly grow into the different columns and categories. So 40 minutes for the age and 20 holders. Now in the previous columns, there was no holders filter, but here we want to have at least 20 people still holding the coin because if the coin was just launched and no one is trading it, no one is holding it, maybe it's very big chance that it's a scam. So 20 holders, those would be the people who are still holding it and not just bought it and sold, but actually holding it. Metrics. The market cap is at least 10K. So most of those coins that are just launched, they will have market cap of $5,000 or 4,500. Now 10K, it's at least somewhere the token getting traction, someone is buying it. And the volume is higher than the market cap. So in this case, it's 15K. Transaction, at least 30 transactions, which shows you that people buying and selling, you need to have some activity on the coin. And again, nothing for the socials. And once you click apply, you will have very, very few coins that are legit, that have actually getting some tractions right now at this moment. Now, all of these filters that I just told you, Sometimes you need to be more liberal with that, sometimes change them, sometimes increase them. If there is a big meme coin narrative and everything is popping, if Solana is increasing in price, if fear and greed index overall in crypto is positive, if we're in the greed territory, all of those filters need to be increased. And if the things are slow and fear and greed index is very low, then the meme coins will be much drier, there will be less liquidity, less activity, so all those filters can be decreased. Now, once we're done looking at the filters, now let's check the exact sell each item, each meme coin, and what the sell shows us. Now, for example, let's take this Elvis, right? That's the name. 36 minutes is how long ago the token was created. So we have 36 minutes, we have 2 hours, 4 hours, 5 hours. We want something that was recently created and is gaining traction fast. Those are have high potential that it will get more mind share and therefore more market cap. So that's the age when it was created. The icon with the person, that is the X account, who is the developer, who is the creator. We can have a quick view here, how many followers they have, and specifically what's very important is to look on when the account was created. Now you can see that here it's joined December 2025, which basically means they just created their account, and the chances of a rug pull is higher compared to if we find someone who had an account created much earlier than that. Let's see, December 2025. There is a community here. November 2025, community. Now communities are much better than the accounts, of course. Let's try to find. Here, for example, account is created in February 2012. However, again, there's scams are everywhere. You can see that there is zero following and there's only 124 followers. Now, people can go and create and buy Twitter accounts. You can go and buy old Twitter accounts that will have very young, 2012, 2015. They will appear like they are existed for 10 years, but there was no activity there, and that's pretty much treated the same as scams. The other things on the sell of each meme coin shows you is, here's the link to the pump fund, so you can see how maybe there is chat on the pump fund where the token was created on the launchpad. Then there is a search, so this magnifying glass will navigate you to Twitter, where you will see what people are talking about right now about this coin. The number of holders, 475 for this one. Number of traders, out of those 474, how many are traders who are buying and selling constantly, who are not just again, if there is a network of wallets and they are just the developer scammer trying to create the appearance of activity of trading, they will have those wallets will not appear as traders. These are more of a verified traders, wallets who are constantly buying and selling. Now at the bottom we have this icon of a person with a star, and sometimes they come out in red, sometimes they come out in green. For example, for this BUT coin, it comes out in green, and those are the top 10 holders. So just as I mentioned in filters, we have the top 10 holders, how many top 10 wallets, how much percentage of the supply they have. And we can quickly see in these coins this metric. So 24% for the prediction capital markets, 23% for Mickey OS. And we don't want the moment it becomes red, the moment it becomes more than 20, Axiom marks it in red, because that is not good when top 10 have more than 20% of the supply. Then DS means developer sold, meaning the creator of the token already sold the token. Now in the past it was a good signal that the developer already sold, so there will be no red candles, because usually developers are the biggest holders. However, that metric already pretty much dead, because people create the token and then they load on that token from their side wallets. So developer sold, it's not a very good or informative metric. However, Axiom also shows you when the wallet of this developer was funded, and in this case it was 2 months ago. The longer it is, the better. It shows you that it's not some quick wallet that was created just for the quick scam. Then you have snipers. Those are the automated bots that are buy the token immediately after it was created, and we don't want that value to be very high, because those snipers, they tend to exit quickly to realize their profits. And it's the same as the top 10 wallets, it's the same as bundlers. That's the last metric is the bundlers, how many percentage belongs to a group of wallets that are interconnected. So you don't want these values. Ideally they should be all in green. Let's see, for this Bitcoin they are pretty much in green except for the insiders holding. And the last one is the DEX paid. If on DEX screener, if the coin pays to the DEX screener, then they get this title of DEX paid, and that gives you ability to the coin creator to update the image. In this case it's Bitcoin, the image was updated, and also to add links to your socials, to Twitter. So pretty much it makes more advanced listing on DEX screener, which is just another website where you can track newly tokens, and you also can trade. Projects that have DEX paid usually are better than projects that don't, because again, a scammer, they're not going to spend additional money into creating of token. They already spend their time. Creating of token doesn't cost anything. Maybe they bought some supply of that token, so they already spent money, so they just don't want to pay more money. And communities and long-term projects, they make sure to pay their DEX so they appear more legit. Now let's click on one of these coins and see the detailed view. This one just came out and Santamon. And when we open it, we see this line, dotted line, that is the graduation point. And we want of course the price to ideally go to the migration. However, a lot of coins, they approach this level, but they never actually cross it, because the developers or the creators of the token, they see that the coin is about to graduate, and they tend to exit that coin right before the migration moment. So buying coin that is just about to graduate is very tricky and sketchy, and I would recommend, if you're just learning how to trade, to wait until it's either graduated, or to see when the coin survive the first big red candles, the first big pullbacks. So this is the chart you can see, and there is a lot of information. It's probably overwhelming, but we're gonna focus on this panel on the right hand side, and specifically on here you will be placing your market buys, how much you want to buy. There are the quick presets that you can click and select how much you want to buy. And look at this 20% gas priority fee and bribe amount. These presets available right here. If you click on them, you can change. And what is slippage? Slippage is if you see this token, for example, traded right now, the market cap is 20K. If you can switch to price, and if you say the slippage 20%, it means if you place an order, the price at which your order gets executed, even though you place it right now, it might be 20% above or 20% below. And in Memecoins, things are moving fast, and the transactions as they came in, sometimes they get clogged, and therefore you need to allow that slippage so that your order eventually gets filled. Priority and bribe, it acts the same way. It just gives additional incentives to the validator who is running the Solana node to get your transaction in faster. So if you pay higher bribe and priority fee, your transaction is more likely to get fit. So it's kind of like even though you would want your transaction to get executed at the specific price that you want, the current price, but you end up paying more money, or you can allow the price to change a little bit and pay less money in the priority fee. Because you just will be learning, I recommend you to say priority fee at the lowest, which is 1/1000, and the bribe also 1/1000. And you can change those presets if you see some narrative and you have high conviction into that narrative, into that coin. You can change your presets and where you will have different maybe priority fee and bribe fee to make sure that this specific coin, this specific order will get filled. Now these presets are also available in the pulse view. Let's go back here. Right at the top we have P1, P2, P3, and if you click on them, that's where you set the same amounts. And if you set them here, let me tell you what's auto fee. So if you select auto fee, it means that your orders will 100% get, maybe 99% chance it will get executed. However, you are not guaranteed at what price. It basically set by the system. So whatever, if the system is very clogged, lots of orders coming in, the slippage can be very high and the priority and the bribe can be very high. However, your order will get, the system will try to fill your order. So that's auto fee. I don't recommend it if you're just learning, because again, you don't know what you're getting yourself into. You don't know whether you need to be getting into that specific coin that gets so popular that your regular setup is not letting your orders to fill in. So I don't recommend to have auto fee selected. Mev mode is, again, it's better to have reduced so that you are not getting attacked, your orders are not getting sandwiched, which is another way how to lose money. You will not lose all of your money, but your trades will have small percentages eaten out if you don't have the Mev protection on. But again, if you have high conviction, if some coin, you can have Mev mode off completely once you get more comfortable and you know what you're doing. But at the beginning, I would recommend you to have reduced or even secure completely. So that is for buy. You can set up those presets for buy and for sell. And once you have those presets, you can also have quick buys and sell. Right here, for every category, every column, you have these zeros. And if you change, let's say to 5, you can see that this button just changed its value to 5. What it means is now, if you click on this button, you'll spend 5 sol on this coin. So as you looking at the pulse and observing what's happening, if you see some coin that is imploding, the volume is increasing, you can quickly buy it with 5 sol. You buy it with 5 sol, and then later you open in a separate window where you can manage where you will sell that token. As I mentioned, your main goal is capital preservation. You have to be trading not from the standpoint of making money, but preserving of what you have. So if you have 10 sol, your goal is to at least save those 10 sol and not to get rug pulled. Let's look at all different techniques how to find rug pulls and scams. If you're learning something new in this video, press like button so YouTube will recommend more videos like this one and you will continue learning. When you open detailed view for any coin, let's look at the bottom, holders, select holders, and then if this toggle for bubbles, show bubble map, is not selected, press on it. So you will see the bubble map. Each circle represents a wallet and the size of the circle is the percentage relative to 100% for that wallet. Now the connected one and colored one are the ones that are somehow maybe there was a transfer of tokens, maybe they were funded by the same wallet, but that is something that we don't want to see. We don't want to see big web of wallets interconnected. For this token specifically, we have the top 10 wallets having 25%, which is in red, it's above 20. However, it's still within the, it's not 30, 40, 50. So let's look deeper into this coin. It's not necessarily a rug pull right away. So just looking quickly, we don't see big clusters of coin. This pink one, if we select one of them, we see that this cluster has 3.67%. The amount percentage, that is for specific circle that the wallet that I chosen, but we will be looking at the clusters. So 3.7, it's not a lot. Let's look at others. This one has 1% and this one has 0.5%. You can also switch between different providers of this information. So default one is Insight X. You can also check on faster 100x and bubble maps and see sometimes also those softwares, they don't detect the webs. They are not very good at detecting those webs. Some of them have the different techniques how to detect interconnected wallets, but just cross-check between all of them. The second thing that I would look at, this was like the first one, is just the bundling. If there is a huge bundle, we're not gonna look at it. And I chose a couple bad coins to show you how a bad bundled coin looks like. But right now, let's check other signals that you should be looking at. The other one is the funding. So again, we're looking at the holders here, and here the last column, it will be a little bit maybe to the right, that will be the last column, is funding. It's where the wallets were funded from. So these are individual wallets holders who are holding this specific meme coin. And if I'm the developer, if I'm a scammer and I control a big chain of wallets and I want to rug pull, meaning place one big sell order and just take all of the money out of the market, I will create this big web of wallets, but because I'm still one person, one individual, I will fund my web of wallets, my bundle, from one wallet. And that's why you should be checking funding to see if there are any similar wallets. And if you have, so we see here 50 top holders, and if you see the same wallet appear again and again, that means that that bundle of wallets was funded from that same wallet, and it's not a good sign. And again, I will show you in a sec how a bad token looks like that was completely a scam. Looking at the chart, this is built in Axiom. It's trading view, so all of your indicators also exist here, but for meme coins those indicators make no sense, and there is no point of drawing Fibonacci levels on meme coin charts. But just quick look at the chart, you can see that there are some spikes, there are some drawdowns, and this chart overall looks natural. We can switch to 30 seconds, and you can see how the coin was trading, was ranging, it found its support, then it had breakouts, retracements, accumulation, and then pump, big dump, and continues going up higher and higher. So that is the average movement of any asset that is tradable. It shows that there is no obvious patterns, it's completely chaotic, unpredictable, just no indication that it went lower at this point after it went higher here. Nothing can be timed and predicted with this chart. It's completely chaotic. However, let's look at some of the tokens that I chose for you that are scams. You can see at this chart that it's completely fake. That is a volume bot working on this meme coin. It's basically trading against each other, and the chart looks just funny. There's not a single sell candle. What is this time period? This is 5 seconds, so each candle is 5 seconds, and there is not a single sell order. And that is how you know that it's a volume bot. Another thing about scam coins and scam projects is there will be this one big candle at the beginning. It's because this web of wallets needs to be loaded up at the beginning. And that's why we have this big candle. So, and because the developer, the creator of the token, controls the supply, they are able to initiate this buy order right at the beginning of the coin creation. And hence, but they cannot hide that activity from the chart itself. And on the chart we see this huge green candle, and after that we see this small increase in the price in candles, and not a single red candle. I wish every chart will look like that, but you never buy things like that, because we probably can witness the moment it will get rug pulled with a one big red candle all the way to the bottom. And with this method, the way they're doing it, they control 99.9999% of the supply. It allows them to push the market cap all the way, look at this, to 1 mil. So they easily graduated, they went through all of those steps, got into the rightmost column of migrated column meme coins. All of that because they control the supply. So if they control the supply, they control the price and they can do anything with the price. If we move lower, again, select holders, and let's look at the bubble maps of the scam project. And you can see like there are just few wallets. I don't know why they got into this coin. Maybe it's also affiliated with the creator, but there is a big chance that those are innocent bystanders who somehow decided to buy this coin. This is the web of wallets that I was telling you about, and the cluster shows only 0.04%. This huge wallet shows 19% and no relationships. Now for data for coin like this, it's not complete, so that's why you would check other providers and see how they would and show the bundle. Now Bubble Maps shows you this one big wallet, and that is exactly what I was telling you about. 99.95% is in that wallet, and the rest, the cluster itself controls 99.95. So this wallet, specific wallet, controls 80%. This one controls 19%. So they total 99.95%. And seems like there was no, at least Bubble Maps doesn't show any other wallets that are just accidental. This is the only wallet that they show that's not part of the bundle. But this is exactly what you should be avoiding. You want diverse number of holders, of customers holding the coin, investors, traders, so that it doesn't rug pull you. And it's possible that the algorithm that is driving this coin programmed so that it will continue trading higher and higher, just like this chart, until someone will come in and place their first buy order. And the moment they place their first buy order, even if it's just small amount, like $10, they will rug pull immediately for those $10, because for them it doesn't cost anything to run this whole operation. Now let's look at the funding source for this scam coin. We go into holders again, scroll all the way to the right, we look at the column funding, and what you can see is all the top holders, you have this NYDM. That is the source of the funding, and you can see that there is no data here, and the funding, the Solana balance, that is the second column, was 17-18 minutes, and they all the same metrics, all the same data, and that's how you know it's all funded by the same source, by the developer who is the scammer, who is waiting for someone to come in, lure you in, and then rug pull and get your $10, and that's it. And they run multiple those scams. Another thing that you should be looking at is this at the bottom. So this coin called Red Bull, just Red Bull, right? For the drink. And you scroll down to the right, bottom right corner, you see reused image tokens. And there are 500 similar images that were just similar to the same meme coins, and it's just Red Bull. And here, this coin was created, it says 0 second, 1 second ago, 2 seconds ago. But at the bottom right, we see that similar Red Bull tokens were created 1 year ago, 2 months ago, 5 months ago. And there are also similar tokens, not only the exact, the image and the name of the token, but also like similar. And it's a Red Bull, literal Red Bull, there's some not affiliated with the drink. And that's how you can see projects that are just copy-paste, LARPing. They are LARPing as other projects that are the same. And they just continuing building those new tokens, waiting for someone to get in, spend 10, 20, 30 bucks, and then they will rug pull once that 30 bucks order comes in. I have a separate video focusing on different aspects of scams and rug pulls, how to detect them, how to find those rug pull coins. Click on the link at the top right and check that video. Changing from Axiom and focusing more on X, most of the KOLs, they are on crypto Twitter, on X, and if you see, there are some signals how to detect whether the coin would be rug pulled soon, or maybe it's paid for shield coin. And if you see an X account that has tens of thousands, 50,000, 80,000 and more followers, and they're promoting a coin or even mentioning a coin that is below 100K, just avoid those coins. Don't follow that key opinion leader. Add them, in fact, to a separate list. We have in our Telegram group, we have a list of the accounts that were noticed to promote coins that are below 100K, and you can check that list in our Telegram group. The thing why it's scam is because those accounts with 20, 30 and more followers, they have big pool, they have lots of people following them, reaching out, a lot of people watching them and following everything that they say. So if they mention any contract address, if they mention any meme coin, people they're following gonna start buying that coin, even maybe 5-10 people, but it's still gonna create those green candles. And because this account owner, they load and buy the coin before they post a tweet and start promoting, they can just use their following as an exit liquidity. Therefore, you don't follow those accounts and you avoid them at all costs and keep them in a separate Twitter list. That's what I'm doing, or just check our list in the Telegram group. So if you find a meme coin connected to a project, but then when you start checking the X account and other links, official links and pages of that account, if they are not promoting a meme coin, if they're not posting the contract address, if they're not mentioning anywhere that they was thinking to launch a coin, and if they're not promoting that exact specific contract address, just don't buy it and stay away, because anyone can create any meme coin. There is no obligations, there is no intellectual property rights, none of that exists. People create meme coins for anything, for everything, and as the news come out, maybe there are new features for a project, for a product, the meme coins will be created for those new features. And if those projects are not promoting the meme coin itself, avoid that meme coin. And as I mentioned earlier, when the developer or creator of the token creates the meme coin, they can put any links into the description. They can add any Telegram, any Twitter. They don't need to own that Twitter account. They don't need to own that Telegram. They don't need to own the website that they're gonna put. They can put anything in there, any links. So don't treat it as a signal, as a green flag to buy. So just assume that everyone is guilty, everyone is a scammer until proven innocent, and treat those pointers, those links as pointers to what the meme coin is about. For example, if it's a TikTok meme, there will be a link to a TikTok explaining what the meme is about. But remember that those links, they are arbitrary, and developers can put any links in those fields. Lastly, about the scams, I wanted to mention that you can get rug pulled not only by buying a rug pulled and scam coin, but you can get scammed by downloading some extension. You will start trading, and there will be a lot of tools promoted and marketed to you to improve and increase the speed and improve your trading experience, maybe the speed of placing trades, maybe some analytical tools that help to show Twitter feeds. And be very, very careful, and basically just do not download any extensions. Even the best of the best in meme coin trading, they got rug pulled, they got scammed, and their wallets got drained. The Axiom wallets got drained, the Photon and Phantom, it doesn't matter where they were trading, where they were holding money. It's just, it gives you so many new ways how to promote different projects to you and extensions. And once you download those extensions, and if it's on the same browser where you have your wallet connected, there is a very, very big chance that your wallet get drained. So just focus on Axiom and try to stay away of all other extensions. And even better, separate where you have your Phantom and other wallets and where you have your Axiom trading. Now you know how to trade, you know how to avoid rug pulls, avoid most of the obvious scams. Now let's talk about more of the strategy and what can be a signal to buy. Meme coin trading is for chronically online, for those who are ready to sit in Twitter and track what are the narratives, what people are talking about, and then staring at the computer, staring at your screen, at the columns, new pairs, the about to graduate, and see what's happening in there, and slowly you will gain that experience to see what is a good play and what is not a good play, and what can be end up being a rug pull. Since meme coins are attention tokens and memes, don't think that some old meme that you found that you remember, the meme coin for that wasn't created already. All of the old memes were already had coins created multiple times, rug pulled, maybe went to the moon and then went back and then mooned again. So you only will be focusing on the new narratives and new ICMs, internet capital markets. That's when the new startups or projects, often on Solana, they create meme coins related to their project. And the other one is TikTok memes. You would be looking for new memes that are happening on TikTok that are blowing up and people start reposting. For example, in September, the 67 meme coin appeared. The meme was on TikTok, but then people started to create meme coins for 67, and it was very simple. The ticker was 67, and multiple coins were created, and people start piling up on those multiple coins, and it didn't matter who is the creator, who is the original creator, if they are rug pullers or not, but the coin started to grow in market cap, and eventually it ended up at tens of millions of dollars. So you will be looking at TikTok trends, new narratives, and ICM meta and coins that related to some projects and new products. Another thing that only exists probably in meme coins, I haven't seen it anywhere else, is the way how to manage your trade. So once you in the trade and then you become profitable, people start to take their profits gradually. That's what's called clipping in meme coins. And here you can see, let's look at this account. These marks on the chart is different wallets that I'm tracking. And for example, this wallet, Yuris, every time you see every mark in the red, that's when he sold. And you can see that each time the coin went up or there was a breakout and we had some green candles, the Yuris was selling, and he made many sells. So the strategy here is, if you bought, let's say 0.2 Sol, and you're now in profit, start taking profit and sell first 70%, and then the rest 30% you can clip in fives and take profit in 5 each time you see the chart breaking out and establishing new higher highs. When you see those green candles, you clip 10%, 10%, 10% until you take the whole profit. However, you can leave small amount, 5% or 10%, to that's what's called moon bag, the amount of small portion that you expect the coin maybe to go into the 10 million valuation or maybe 50 million valuation. That happened in 2024. And if you completely exit, you lose that chance to go to the moon basically. So if you're in profit and you already took out your whole principal and the profit, if you still have a little bit left, I would recommend you to leave those 3%, 5%, just in case the meme coin goes into the millions, so that you don't feel like you exited too early. And when managing a trade, you also should be looking at the overall crypto fear and greed index as well, because again, if we're in a fear, if everything is exploding, Bitcoin establishing new all-time highs, the new liquidity is coming into the meme coins, then you can be a little bit more liberal with your clips. And even if you're in profit, you might not necessarily take the 70 or 80% right away out of your position, but maybe take 10%, another 10%, and just slowly, as there are new highs established, you take those profits. And if overall crypto is in the fear and Bitcoin is crashing and liquidity is gone, then you should be more conservative, and once you're in the profit, just take 80% out of the position and then manage the rest 20% in clips. Now, as I mentioned, this Yuris wallet, it's one of the wallets that I'm tracking, and right now I'm tracking around 313 wallets. You can find the full list of those wallets and copy it to yourself and import it into your Axiom, so it it will appear on the chart like it appears here. Find the list in our Telegram group. I'm gonna include the link in the description. And the why we can track those wallets is because that's the amazing thing of crypto, because everything is on chain, so we can be looking into those wallets when they buy and when they sell. And if we can track professional and very profitable traders, we can even look at their track record, what's their win rate in their trades, and are they profitable or not. So once you have that list, you'll be able to see those wallets on the chart. However, don't try to copy trade. And if you see some wallet that is very respectable, very profitable, and you see that they're buying some coin, don't treat it as a signal or as an immediate signal. First, you need to observe what they're gonna do with their position. Because right now what happened is all these wallets that are profitable, everyone is already tracking them, and there was a lot of copy traders. And what happens is a person places an order, the KOL places an order, and immediately copy traders start buying the same coin. That causes the price to go higher, and that KOL, they can immediately sell their position and they immediately have the profit. They don't need to do anything. They can buy scam coins and just close and drain and extract that liquidity from the copy traders. So don't blindly copy trade, and I advise you not even looking into the direction of copy trade, because you need to have certain software also set up to copy trade wallets. So don't copy trade. Instead, when you see some wallets buying a certain coin, and if they are not exiting right away, track those wallets more specifically and more closely, so that you see that they bought and they haven't sold immediately, they haven't exited, they haven't used their following as the exit liquidity. So track those wallets and do not copy trade. And lastly is the technical analysis. There is no technical analysis in Memecoins because these are very new assets, not in the overall time-wise they are new, but they are launched. And they are called daily runners because they run to maybe 100K or 500K, and they die within a day because new things, new memes, new concepts, they come around, and new day comes and brings new news, and new meme coins come back, appear, and new meme coins being created. And lastly, about the technical analysis. I know a lot of traders love technical analysis to draw some lines, supports and resistance. I do it myself, but in Memecoins there is no technical analysis because these are very new assets, not in the overall sense that they are just 2 years old, but each individual meme coin, they are created and often they just don't exist, and the pump is gone within a couple hours because there is just attention and news coming again and again. You're trading attention. So don't use technical analysis for meme coins. In Axiom, the third item is trackers. Once you click on it, that's where your wallets that you're tracking, as well as the Twitter accounts. Remember, it's attention token, so it's important to see the big picture of what's happening, what memes are popping, and what coins are being launched and by whom. Once you get the list of 300 wallets from our Telegram group, you can add them here. How to add them specifically and how to add the Twitter accounts, check our Axiom Pro tutorial in the top right corner. Since Twitter becomes an essential part for your meme coin trading, you should definitely invest in Twitter Pro, so you can have a deck and you can have columns for specific Twitter lists. And you can find links in the description as well for my lists that I created for meme coin, that I'm tracking accounts that are posting about meme coins, promoting, shilling, and just in general discussing. So you can add them to your Twitter deck and track them and have them open in a separate screen and see as well, use it as another signal. And lastly, you maybe heard about the different meme coin groups such as Pastel Alpha or Kaizen, and that is a good place where you can, unfortunately they are not free, you have to pay for them, but often they share a lot of alpha and meme coins and memes in general, they appear in those small communities, and the people start trading them, and after that they explode into the outside world outside of those communities. It's worth the payment. You can try for 1 month and see if it pays off or not. But the biggest communities are Pastel Alpha, Kaizen, and Potion.